Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets have given up all the gains of the day. In fact, we're trading in the red. The Nifty and Sensex are trading with a negative bias. Banking stocks are the primary laggards. Wipro remains among the top Nifty gainers after its second quarter earnings and subsequent guidance raise. Federal Bank has fallen post its second quarter numbers after its asset quality saw a marginal deterioration on a sequential basis. Open interest has surged in Mindtree ahead of its numbers. Traders are taking fresh long positions on the stock. And the Chetak is back. Bajaj Auto showcases its first electric offering, marking its return to the scooter segment after a decade. Good afternoon, Neeraj. Well, we've given up all the morning gains. I think we've snapped the three-day gains as well as we speak.
Yeah, but, let's wait and watch what happens with the course of the day. These days, Navneet, the markets have shown some resilience, you would have to admit, in the past few days. So the question is, can that continue? And that's what we got to figure out over the next 1.5 hours. Yesterday, too, the last few hours showed some strength from the equity markets, particularly from the banking side. Today, the banks are the principal culprit. So while the Nifty is flat in trade, look at the Nifty Bank. That's the principal culprit, down about 0.5% or slightly more than 0.5% actually. And that's slipped in the last 45 minutes, pulling down the markets along with it. The mid-cap and the small-cap indices ended flat yesterday, started off marginally higher today. For now, you would have to say these are flattish moves. Yes, it's down about 0.5%, but the small-cap index is up about 0.8%. So the market rate must not be gyrating too much in the session today. However, individual stocks, and get the heat map up on the screen and try and show you what's moving and what's not. As you can see, the market breadth showed that how it's narrowed back. But as you can see, on the breadth on the Nifty as well, pretty even Stevens. What's done well? Z is up 6%. That can happen on any given day and buckle down as well. The stock to monitor is BPCL. Markets clearly believing that Aramco might be very keen on a stake, and I presume that that's the reason why the stock is doing what it is doing. 5% up in the session today. Bajaj Finance 2.5% higher after 2 or 3 days of a pullback. Bajaj Finance is doing well. Wipro has gained 2.5%. I don't remember the last time really Wipro doing much better than the other peers having declared their numbers, but that stock is up 2.5%. Ultratech Cement about 1.5%. Coal India about 1.5%. HDFC has had some gains. Infosys has had some gains. I reckon that stocks like HDFC Bank, for example, would have come under a bit of pressure in the session today, because those would be the reasons why the Nifty Bank is doing what it is doing. So HDFC Bank down about 0.6%. There is weakness in Yes Bank and Kotak Bank as well. And lastly, amongst the losers, ITC, Vedanta, Hero Motocorp and Hindalco. So the commodity names have certainly come down in the session today. Just very quickly, just want to mark, if you can pull up the MRR of the mid-cap space as well, or just show what the mid-cap indices have done, and just look at the key trends of the day as well. This is what the Nifty Mid-Cap 100 Index has done today. So some bounce back for stocks which were beaten down. Edelweiss, for example, up 5%. Sterlite Tech up 2.5% after a number of days of a pullback, and Apollo Tyres has gained about a couple of percentage points. What's not doing well? Indiabulls Ventures continues to grind lower, so down about 9%. PNB Housing Finance down 7%. Federal Bank down 6%. You will hear from the management on BloombergQuint at about 3%, so watch out for that one. And Eminent Financial Services another 4.5% down. RBL Bank, by the way, the big block yesterday in the stock went up, but in today's session, the stock is down about 2.5% in the session. So that's the more liquid mid-cap universe and the way the stocks are reacting. The stocks are the ones which have lost out quite a bit. But what about the F&O universe, and how are the stocks doing on the futures and the options side? Navneet is here to tell us about that. Navneet.
Thanks for that, Neeraj. Well, we are definitely off the opening levels, just mildly trading in the negative territory. But 11,500 is something where Nifty has been facing some bit of resistance, and every time it approaches that mark, there is some selling which is coming at higher levels. So no major build-up seen when it comes to Nifty futures. Premium has also been on the lower side for last 2 days, 10-11 points. For Bank Nifty, which outperformed yesterday, on future side, it was primarily a short covering rally, and as we speak, it's 5% higher when it comes to OI build-up, and 28,380 is thereabout where the spot level trades. In the morning, India Volatility Index also cooled off. Yesterday also it was down about 3%, which is actually a very comforting sign for the bulls. But VIX, I think, has been gyrating today. Let's just pull up and check where it's currently trading. Last when I checked, it was trading around yes, 16.6 is still where it's trading down 1.5%. Very quickly, then on the option side, for tomorrow's expiry, maximum open interest on the call side is 11,500, and on the put side, as you can see, 11,400 strike has been really active today. It's added about nearly 10 to 12 lakh shares as we speak, telling you that that will be the first support that the market will be watching out for tomorrow's expiry, and that's the 11,400 mark. And put writing is definitely seen there, whereas on the call side, as I said, there is resistance at 11,500. That strike seen riding to the tune of about 13 lakh shares. On the stock future side, Mindtree comes out with the numbers. The stock's trading in the positive territory. There is both price as well as open interest action witnessed in this stock. In fact, it's crossed its 50-day moving average. It's up 5% for the month, but I think the important data point is on the future side, there are a lot of positions being taken as the open interest has surged about 26%. Federal Bank, the stock slipped after posting its earnings a while back. Short positions seen on future side, and it's also trading below all its key moving averages, so watch out for this one. And Torrent Pharma, that slipped below its 50 DMA. There is huge shorting that has come in this counter in today's session. It's trading cuts of 3 to 3.5%. Also, today's fall comes after there is heavy selling which is coming on the cash side. As you can see on your screen, the volume which is being projected on the white line is way higher than the average volume that we've seen for Torrent Pharma in the last 20 days.
Well, let's begin this show with market voice. Bhavin Shah of Sameeksha Capital joins us right now on the show, or Bhavin, as we all used to be calling him now for a number of years. Bhavin, good having you. Thanks much for taking the time out and being with us. It has been the last 18 months, arguably, Bhavin, fairly tough times for portfolio managers. You seem to have done okay. What is your current positioning, Bhavin, in the markets? Are you fully deployed? Are you partially deployed? What's your stance? I don't think Bhavin Shah can hear us, so we'll try and repatch that line and then just get back to him. Meanwhile, just one pocket that I realized that a couple of stocks that we haven't marked, and that's in the small cap space. So 2 or 3 names that are doing well today. For example, Emami, it's up about 4% in trade. And part of the reason would be the Bloomberg story about how they're looking to sell stake in the cement business, and that might give promoters the ammo that they need to ensure that some of the other pledged shares don't come into the market. So that's the one thing that you got to monitor. They really, remember, enter into some transactions as well in order to ensure that the pledged shares don't impact the market. The other one, which is correcting quite strongly today, is PNB Housing Finance, down about 10%. But I think Bhavin Shah is back with us. Sameeksha Capital. Bhavin, good having you. Thanks much for joining in. It's been turbulent times for portfolio managers. When I look at your performance of Sameeksha Capital, you guys seem to have done a lot of things right. So good going there. I was wondering what's your current positioning in the market is, Bhavin. Are you sitting on some bit of cash, or are you fully deployed? And would you be looking to invest more aggressively now in the current scenario?
We probably have around 5 to 7% cash. So by and large, we are fully deployed. If in some of the newer accounts, we may have a little bit more cash, but broadly we are fully deployed. There was actually a thought process of significantly reducing the exposure to the market post budget. But we have found in the past that sometimes trying to move in and out of market it ends up we end up making more mistakes than actually benefit from it. And so actually by not doing so, when the corporate tax cut came through, we benefited from that shift in the market. So as of now, we are fully by and large, whatever extra cash we have, we will hope to deploy over time.
Today the financial names are taking it on the chin. Some of the results that are anticipated or have come about also quite off, Bhavin. And frankly, the last 18 months have been that litmus test for financials, isn't it? The ones which have passed have done remarkably well, but a larger portion of that NBFC space has just fallen by the wayside. What would your prognosis be here? Would you now, from here on, for the next 24 to 36 months, try and look at some of the portfolios which have had some issues but might come out of it, or would you stick to the tried and tested even if the tried and tested NBFCs which are surviving are doing that at a very hefty valuation multiple?
I think we would certainly we always like to look at stocks that have corrected sharply and at least try and understand the reasons for such correction. And if we find that you're talking about NBFCs here, so in the financial space in general, if we are convinced that the lending practices are robust and the corporate governance is sound, and there is certain clear business advantage that a particular institution is enjoying, those three factors, if they are in, they are there, and then we look at the growth and valuation. So our approach will remain the same. So we would not venture into a name that is become very attractive. Perhaps will rally strongly as well, whenever there is a recovery in the sector. But we would, our investment style kind of precludes us from simply buying names, purely because there is a cyclical, rebound that is going to happen. If the other factors are not, if other criteria that I just mentioned are not met, then we will not invest. So to answer, to going back to your question, chances are that we would probably look at, some opportunities outside of what we are invested today. But we are not likely to broaden out too far in that regard.
Hi, Bhavin. Good afternoon. Well, clearly there has been that crisis of confidence in the financial system, which has had a knock-on impact on other sectors as well. And for the likes of auto, which has been witnessing a slowdown for the past many months, looking at the correction that most of these auto companies have seen in terms of stock prices, do you think current valuation now are quite reasonable? There's been a bit of improvement, at least on month-on-month basis, seen for a couple of two-wheelers. Would you venture out in this space? What's the take on the auto pack right now?
We have very small exposure to auto pack. I mean, I think the farm equipment, tractors and so on, there might be some hope for revival given very strong monsoon. Perhaps it feeds into a good Rabi season as well. So we would consider evaluating that a little bit more closely. Going into the two-wheelers and so on, I mean, we remain sort of interested in that space because there are some really good companies, whether it's Bajaj Auto or Hero or Eicher, they all have very well-run companies, even TVS, I should have mentioned. But, I think we haven't so far been convinced from the perspective of a longer-term growth opportunity for these companies vis-a-vis, where they are trading, because that is sort of how we try to map ourselves in. But we would remain interested. I think going into automobile, cars, I mean, I think I would say for example, obviously you start with Maruti, it has bounced back relatively quickly, I would say. I think some of the questions about the four-wheeler growth rates are still there. So, if you have to maybe see it at a bit of a lower price for us to get start rethinking about it.
Okay, that's the view on the auto pack. Well, let's also address the insurance space. Remember, SBI Life came out with the numbers. The numbers looked pretty good. There were margin expansions seen. In fact, for higher margin business, we did see a good amount of improvement coming in. And as we speak, it's just not about SBI Life, though Morgan Stanley in its report stated that the numbers were good on all across all parameters and verticals as well. Look at the New India Assurance, look at GIC RE, even ICICI Pru and HDFC Life. Remember, most of these stocks have been trading around its all-time high levels. GICRE and New India Assurance, by the way, are right now locked in upper circuit with gains of 20%. Bhavin, for the longest time, the talk has been the sector is underpenetrated, hence the reason why even for a couple of these stocks which are trading at all-time high levels command higher valuations too. But is that reason enough, underpenetrated, therefore the growth will be good in the next 4 to 5 years? Are you guys betting on the insurance pack?
Well, look, growth is, under-penetration is a story of India, whether it's, insurance or, even, four-wheelers or aviation or, many of some of the consumer categories as well. We are a country full of under-penetration related opportunities. I think in the insurance pack, again, our challenge remains, twofold. One is, I think there is still a lot of mis-selling that is going on, and frankly, when a lot of product, the way a lot of products are being sold, even by some of the top names you mentioned, are really pushed very hard through their very, very strong organization. If it's a bank, they have their brokerage arm pushing the same product. The bank, and then that pushing is now gone down all the way to the lowest level of the in the chain. And so question is whether or not there will be some regulatory action again in the sector, when consumer starts to realize that they are buying products they don't really need. So some of this recent growth we have seen, I think, has come from very aggressive selling that has happened, and wrong selling, I must say. Yes, it is a sector with a huge under-penetration, a lot of growth potential. But when you are paying for such a high valuation, I think we kind of step back and just watch the space rather than dive into it right now.
You would avoid not just the life insurance, which is arguably the more highly valued pocket, but even the general insurance companies, because while life insurance is doing what it is doing, today the traction is even stronger on the general insurance space, and on a relative basis, that seems to be, on a relative basis, slightly more undervalued than the life insurance companies.
Yes, so we have, in the past, for example, we had, invested in, GICRE, but then, I think we sort of, we exited that name because, they, compared to what was communicated to us in terms of their risk management, we found there were, some divergences. I think, obviously, names like ICICI Lombard are extremely well-run companies. Again, valuation is a challenge for us. So yeah, insurance, we struggle on that front.
Okay, Bhavin, we'll leave it at that. Thanks so much for taking the time out and speaking to us today, and keep up the good work with your portfolio management services. That's Sameeksha. They've done well hitherto. Let's see if their trajectory continues. On to some corporate conversations. ENIL is a stock in focus. Bahrain-based Adline Media has terminated its brand and content license pact with the company. I don't think very dire implications of this, but there is a question to be asked to the management about what's happening with business at large, as a result of which a stock which used to be the darling of the markets has kind of taken a bit of a seat back. Prashant Panday, the MD and CEO of the company, joins us right now in our studios. Prashant, so good having you. Thanks so much for joining in. Just first, a bit of a dive onto the news. What is this? Why has this happened? And what are the implications?
Well, the Bahrain was a brand licensing agreement that we had, which means that we were giving them the right to use our brand, and we were helping them a little bit with the content.
The Mirchi brand.
The Mirchi brand. But the business was being run by our partners over there, and it was for them to manage their P&L and to manage the environment in that country. They were doing the revenue generation, they were managing the costs. Clearly for them it wasn't proving to be viable, and that's why we have mutually agreed to part ways on this particular thing. But that does not mean that we have given up on the market. We are exploring ways of entering the market on our own, or running the business directly under our control, and that when that happens we will make the announcement for that.
Okay, but any revenue or profitability major implications of this?
Very minor. I mean, the overall revenue generation that we would get from there, which is brand licensing fees, would be of the order of 5 to 6 million rupees in a year, which is really nothing for a company of this size. Yeah.
For sure.
Okay, and you also highlighted that you are in talks with the other players for a tie-up there, right? So any timeline around that?
No timeline at this point in time. What I mentioned is that we may tie up with a local partner and run the operations ourselves directly, but no timeline at this point in time.
All right. I'm sure you'll be in silent period. You're not going to comment on your earnings, but nevertheless, just a word on how the quarter gone by has been compared to the first quarter.
Well, I can't comment on the quarter gone by, but if you read the reports which have come out, and there was a company which declared its results yesterday from the media space, and the advertising revenue there has been 24% down compared to last year. So generally, the belief has been that the quarter two has been worse than quarter one, and I think broadly I would agree with that.
Okay, I remember in the last conversation, the non-radio revenues have been going up. So is that the trend that's going to continue for the remainder of the year?
I've spoken consistently on your channel that it's been a part of a long-term strategy. Developed by management, vetted by board, course corrected and analyzed, and we are truly on our path to making this a multimedia company, a much larger entertainment company rather than just being a radio company, right? So you saw that our revenues last year, about a third of it came from what you call non-FCD, but what we call the solutions business, and we see that growing to almost 50% in the years to come. We are very much on course of that. In fact, the solutions business continues to do strong numbers. It continues to, it grew by 30% in the first quarter, for instance, even when the core radio and the core mainstream media markets remained under pressure. And I think that's logical because in adverse times, clients are seeking solutions. They don't want to buy media. I mean, no client is invested in spending crores and saying, okay, give me print or give me newspaper or give me television. They're interested in moving their product. So if somebody can give them ideas, and the ideas we give actually span multimedia. So it's a big piece of our business.
Prashant, I wonder why is it that the market would be a bit, what are the reasons why the market would be disappointed with media stocks by and large, but your stock as well, because you have stated on record that this is where you want the company's direction to be like, and arguably over the next few years it might prove to be right as well. When you talk to brokers or when you talk to bankers in any fashion whatsoever, is this valuation multiple derating that people are talking about because the nature of the business is changing, or is it unpredictability around both? Because the media business or the ad business, as you yourself mentioned, typically people would advertise more on radio because the ad space is not that expensive, and because that is also shrinking. Add to that the fact that the new business line may not be as robust as a 5-year-old established line might be. What is it that is causing this?
Well, you covered several points, so let me take each one of them.
Yeah, I was just thinking what it could be. You would know better.
One at a time, right?
Yeah.
So the first thing is that, see, the stock price of all media companies have come down significantly, 50%, 60% over the last 12 months. And that's partly a reflection of the market conditions, the general economic situation in the country. We were not too worried about that. But if you look at the last 30 days and where the ENIL stock has taken a particularly big hit, we believe the one reason, there are 2-3 reasons for it. One reason, of course, is that we've been a very illiquid stock, and therefore when one broker sells for whatever other compulsion that they may have, then it tends to be a kind of worry area for other people who are holding a stock. And remember, because we were in a silent period, we have not been talking too much to funds and to investors and all of that, and therefore there was a perception that, hey, is something going wrong in the company, which isn't the case. And my chat with you today is really about that the company continues to remain very strong. Even in the core radio business, in the last 12 months, we've actually gained 1% market share. Our listenership numbers continue to hold very strong. And like I said earlier, our solutions business continues to grow. And here's the last thing I want to say, that the solutions business gross margins have always been a matter of concern for investors in the company. Well, the gross margins have been rising consistently as well. It was 30% in FY18, it grew to 32% in FY19, and in quarter one, it touched 39%. Now, there's a concerted focus that we put on it. So it's growing in revenue terms, it's growing in margin terms. No such thing over there. Now, one last point that you touched upon is that, in an environment where core market is falling, actually it's a temporary fall in the advertising business overall, and that affects all the media segments, television, print, everything. I think that it will lift in the quarters to come. One of the reasons why the radio business in particular will lift quickly is because a big chunk of our advertising comes from central government, and the central government has not advertised at all since it came to power. And the simple reason being that they are in the process of doing it. They have now empaneled all our batch 2 stations. They've done that step, and the next logical step is that they will start advertising. So the revenues will lift, the profit margins will lift. I don't think that core radio business is under pressure beyond this quarter maybe.
You reckon technical reasons are probably the main culprit for the stock doing what it has done in the last 1 month?
I think so, yes.
Okay.
Just a word on, considering we see these ad revenues going higher in election season. That was not the case in Q1, but we've also got some state elections now. Are there any signs of pickup that you're seeing?
Well, so election advertising depends most on whether there is a perceived battle on the hands or not, right? And we saw that during the general elections, even though the end result proved that it was one-sided, there was a perception that there was a stiff competition, and therefore actually the radio industry did extremely well in the general elections. In this round, the spends are much lower, and you'll see it across media. I mean, you see hoardings which have come up in Mumbai just about a week back. Radio campaign started just 5 days back, so spends are much lower this time.
I think media must be hoping that there is a surprise so that business revs up,
Exactly.
I think there is a cartoon company called Snap News which put out this thing of 3 caricatures saying one caricature, I don't want to get into what caricature said what, but one caricature said, we don't need to spend money. The other caricature said, we don't have money to spend. The third caricature said, is there an even point in spending money? So, yeah, I mean, what Prashant is saying might well be the sentiment of the market as well. But let's wait and watch. It's elections, you never know. But Prashant, take a moment to thank you for joining in today. Small piece of news, the Bahrain cancellation, so it doesn't really impact revenues too much. And the management saying that there are technical factors behind the 1 month fall. Maybe some of that could rev up at some point of time. All the best with the quarter, Prashant. Look forward to talking to you then. That's ENIL, the MD and CEO Prashant Panday, talking about how business has been and the piece of news. Okay, let's move on. The markets have, well, to be honest, recovered a little bit as well. As we said at the start of the show, these days the markets are very volatile. And the last 2 or 3 sessions, they've actually shown the strength in the last 1.5 hours of trade. So let's wait and watch if that lasts or no. But let's talk about funds. ICICI Prudential has increased its stake in its in ITC for the month of September. It has also bet on a couple of financial names. It has cut its stake in some PSU majors. Yash Upadhyay is here to take us through the portfolio rejig. Yash.
Afternoon, Neeraj. So we have seen mixed trends emerge in terms of the buying and selling that ICICI Prudential has done for the month of September. We'll start first with the list of companies wherein they have increased their holding, and right at the top, as you mentioned, ITC is where they have increased their holding considerably. Over 1 crore shares added in the month of September. Axis as well as Equities from the financial pack, they saw some amount of buying coming in as well, along with the likes of Cipla, NTPC as well as a little lower in the list are also some of the other pharma names like Biocon that too feature in. So a mix of these names, NTPC and GAIL, they've added close to around 24 lakh shares there. On the other hand, the stocks wherein they have reduced their holding, right at the top is ONGC, when they have sold in excess of 4 crore shares in the month of September, as well as Tata Power. Tata Power, remember, was one of the names which had been right at the top. So some amount of profit booking, or probably some amount of reduction in their total holding seen in that name. Motherson Sumi, Tata Motors might not feature in the list of top names, but there too again we've seen some of the auto names seeing selling coming in. SpiceJet, SBI, SAIL and L&T are the other few names, or the other big names that have seen a sizable amount of reduction in the month of September. Moving on, in terms of the stocks which make it to their portfolio for the very first time, and right at the top is Wheels India, again an auto ancillary company, so they've added around 8.5 lakh shares there, and a small quantity in Rail Vikas Nigam. And lastly, Techno Electric it's another EPC based company wherein they have reduced their holding, and it now goes out completely from their portfolio. So they held a little over 2 lakh shares, that's gone out completely. And Shalby, which was one of the companies which came out with the IPO a couple of years back, not the biggest outperformer there, and they have completely moved out from that counter. Back to you.
All right, Yash, thanks a lot for bringing all those details with regard to what ICICI Pru did in the month of September for their funds. But moving on, India's Khichdi model of development is hampering growth, says Vedanta Resources Chairman Anil Agarwal. Speaking to Quintillion Media's editorial director Sanjay Pugalia, Agarwal says it's imperative that the government moves away from auctioning natural resources and choose a revenue sharing model instead. Listen in.
3 चीज़ की ज़रूरत है। नंबर 1 कि हम एक्सप्लोरेशन को सबसे ज़्यादा महत्व दें और उनको रिस्पेक्ट दें जो एक्सप्लोरेशन करता है। अगर उसने कोई चीज़ मालूम कर ली यहाँ पे डायमंड है या यहाँ पे सोना है, तो उसको हम करेज करें और उसको बोलें कि अब तुमको हम फैसिलिटीज़ देते हैं कि तुम इसको आगे बढ़ाओ। ये नहीं कि उससे आपसे वापस छीन लें और फिर उसको ऑक्शन करने जाएं। आप अपना एक तय कर लीजिए कि हम 25% हम इसके ऊपर रेवेन्यू शेयरिंग करेंगे, कोई ऑक्शन की ज़रूरत नहीं। अगर किसी ने एक्सप्लोर करके कोई चीज़ को निकाली है तो उसको 25% दिया, वो पैसा इकट्ठा करेगा और वो उसको निकालेगा। नंबर 3 कि हर हालत में जो सबसे बड़ी रोक है वो है फॉरेस्ट क्लियरेंस की। वो 60 दिन के अंदर में, आज सारा काम सेल्फ सर्टिफिकेशन का है। हम इनकम टैक्स, सेल्स टैक्स, एक्साइज सब सेल्फ सर्टिफिकेशन में करते हैं, असेसमेंट बाद में होता है। हमारे यहाँ जो भी इंडस्ट्री लगती है पहले क्लियरेंस लेनी पड़ती है, और नेचुरल रिसोर्स में तो लेते लेते 2 साल लग जाते हैं। उन सबको सेल्फ सर्टिफिकेशन में डाल दो। यू हैव टू स्टार्ट ट्रस्टिंग पीपल एंड हैवी पेनल्टी इफ दे डोंट फॉलो।
माहौल अभी चारों तरफ ये है कि बिजनेसमैन पर ट्रस्ट नहीं है सरकार को,
वो करना ही पड़ेगा। उसके अलावा आप देखिए, मैं बार बार बोलता हूँ कि 2 ही तरह की दुनिया है पूरी दुनिया में, एक सोशलिस्ट है, एक डेमोक्रेटिक है। सोशलिस्ट कंट्री में गवर्नमेंट बिजनेस चलाती है और डेमोक्रेटिक कंट्री में एंटरप्रेन्योर और प्राइवेट बिजनेस चलाते हैं। गवर्नमेंट बिकम ए रेगुलेटर, दे क्रिएट ए रेगुलेटर कि कोई गड़बड़ नहीं करे। उनका काम यही ही रहता है कि रेवेन्यू लो और काम ठीक से चले। उस रेवेन्यू को वो अपनी एनर्जी जो है देश को का इंफ्रास्ट्रक्चर डेवलप करने में लगाती है। वो मॉडल इंडिया में करना पड़ेगा। खिचड़ी वाला मॉडल चलेगा नहीं।
एग्जैक्टली तो ये बिल्कुल हाई टाइम है। और आपने बहुत इंपॉर्टेंट बात कही कि जो नेचुरल रिसोर्स अगर आप प्राइवेट प्लेयर के साथ काम करके दे रहे हैं कि आप इसको प्रोड्यूस करिए, वैल्यू एड करिए, देश तरक्की करेगा। लेकिन यहाँ पर तो अप्रोच ये है सरकार का कि हम रेवेन्यू कैसे मैक्सिमाइज करें। उनको ये है कि हम ऑक्शन करेंगे, तेल के कुएं बेचने हो चाहे टेलीकॉम का स्पेक्ट्रम बेचना हो, हमको कितना पैसा आया। उनको शॉर्ट टर्म पे अपना रेवेन्यू और अपना टैक्स दिखता है। आप वाला विजन समझ में कहाँ आएगा?
ये मैं गलत नहीं बोल रहा हूँ, लेकिन मेरे को बचपन की कहानी याद है कि जब कुत्ता वो हड्डी चूसता है तो अपने खून को चूसता रहता है। उसको लग रहा है कि उसमें कुछ निकल रहा है, वो सामने हड्डी से कुछ आता नहीं है। वो हम लोग को अपनी वो है भी नहीं। ये गवर्नमेंट को जितना आप बताएंगे तो 2 चीज़ें मैं बता रहा हूँ। एक तो ये नेचुरल रिसोर्स के बारे में मैंने सिंपल आपको बताया, क्योंकि इससे इंडस्ट्रियाँ बहुत लगेंगी।
ये इसमें चूंकि आप दुनिया भर में काम करते हैं तो थोड़ा एक वर्ल्ड जो स्टैंडर्ड प्रैक्टिस है वो बताइए क्या कि दुनिया में दूसरी सरकारें जब इस तरह के नेचुरल रिसोर्सेज देती हैं प्राइवेट हाथों में तो वो कितना पैसा लेती हैं या क्या टर्म्स पे लेती हैं, रेवेन्यू शेयर पे लेती हैं, कैसे करती हैं?
20 से 25% की रेवेन्यू शेयरिंग है।
और हमारे यहाँ
कुछ भी ले लेते हैं, लेते नहीं, ऑक्शन करते हैं, कभी खुलती नहीं है, 80-90% और
वायबिलिटी खत्म।
हाँ, सबसे बड़ी बात है कि छोटा छोटा करने से कुछ होगा नहीं। जब तक कि बड़ी माइने, कोयले की 100 मिलियन की माइन खुले, गोल्ड जो है वर्ल्ड का लार्जेस्ट गोल्ड डिपॉजिट खुले, ऑयल की ऐसी खदान ऐसा खुले जो 4 न्यू बॉम्बे हाई हो जाएं, उनके लिए आपको रेवेन्यू है, पूरा माइन प्रोडक्शन माइन होना चाहिए।
Okay, that's of course the Vedanta head honcho talking about a number of things, including his appeal to the government to start trusting entrepreneurs. So, well, in effect saying, come and give me the businesses that you want to divest, we'll nurture them and grow them. Let's wait and watch who these businesses go to. The one stock that is in the thick of things as far as divestment goes, BPCL, and that is really rip and roaring. The market's not doing all that bad too, very, very flat right now. Manav Chopra of Indiabulls Ventures joins us right now on the show to talk about his thoughts on the markets. Some global news, we'll talk about them in a bit, but Manav, to you first. How are you approaching trade today? The global markets are a bit iffy because of US, China, and the news right now at hand which says that maybe the Brexit deal is impossible unless UK moves. So even there it's a bit of to and fro. How do you approach the nifty trades currently?
See, the markets has been quite choppy in spite of, the indices have managed to trade above the 11,400 levels. The only thing that was missing today in the trade was the follow-on move after yesterday's close above 11,400, and we did see a good amount of call unwinding happening at 11,500 to 600 strike price. So keeping that in play, I think the markets definitely there is some breath missing, and post any breakout, the only thing that the market would want, which would also add confidence to the buyers, would be the follow-on move. I sense on the immediate basis 11,300 350 are the important supports, and we are just trading above the support levels. And in case if we still manage to consolidate and trade above these levels and eventually start moving above 11,500 is when we could see some sort of a trending action. Mainly this choppy move has been happening because there is no confirmation coming from the bank Nifty as yet. So if we see Nifty has managed to see a break above its important resistance level, but bank Nifty hasn't seen a break above 28,900 zone. So until unless bank Nifty doesn't see a break above those, I sense there could be a near-term choppy move to continue. So looking at the overall scenario, bank Nifty seems to have bottomed out, at least in the near-term to medium-term perspective. I think it's just a matter of next few days where we could see a choppy move, but eventually there is a very high likely chance, and we are expecting that the indices would see a break on the upside. So we are quite positive for the Nifty. We maintain our upside target of 11,600 to 700 in the near term, and for the bank Nifty it's around about 29,100 to 29,400.
Okay, so those are some technical levels to watch out according to Manav. We've also got Ruchit Jain of Angel Broking who joins us on the show now. Hi Ruchit, good afternoon to you. We've been seeing higher highs, higher lows for the last 3 sessions for Nifty, and we've not breached yesterday's low, though we've given up gains in Nifty that one would have seen in the morning session. Would you use this as an opportunity, the cool off that we've seen, to create long positions, or would you wait it out?
Hi, very good afternoon to everyone. Yes, if we look at the structure, then the short-term structure for the broader market still looks positive, because Nifty recently, after taking support around 11,100, has seen an up move which is supported by a broad market participation. And even if you look at some of the options data, then 11,400 put and 11,300 put of tomorrow's expiry carries good amount of open interest, which indicates that 11,400 could act as a good support at least for next 1 or 2 trading sessions. And on the high side, 11,500 call option has highest open interest, but the way technical structure is looking, in short term we are expecting this up move to getting continued to 11,550, 11,600 kind of range. So even if minor declines at 11,400, which is the support as per the open interest, if we get around those levels, ideally those would be good levels to enter fresh longs on the Nifty index, keeping stop loss below 11,300 for near term targets around 11,550 to 11,600.
Okay, let's also get you some stock-specific strategies from our experts then. Ruchit, coming back to you, in terms of individual stocks for the day, what are you betting on?
So we have given 2 buy recommendations today. One is a buy call in Bharat Forge. Recently, if you see that 413 was the previous breakout area during a couple of weeks ago, and now after a pullback move, that 413, which was the earlier resistance of the breakout level, that is now acting as a support. And even if you look at the volume pattern, then in the recent price up move, the volumes were good, whereas the volumes in the corrective move is quite less comparatively. So this is a positive sign, and hence this dip which has seen in last 4 or 5 trading sessions should be used as a buying opportunity. Traders can go long in Bharat Forge at current levels with stock below 413, expecting near-term target around 472. And Tata Steel, amongst the metals names, we are positive on this stock because the stock seemed to have formed a double bottom pattern around 320, around the recent lows of 320. And after that, the up move has also been seen a rise in volume. So accordingly, we are expecting a target around 375, 380. So this is not for intraday or 1 or 2 days, but one has to take some positional view of about 2 to 3 weeks. Keeping in this time frame in mind, traders can go long with stock below 328 for target around 375 to 380.
Okay, so there are 2 buy calls coming in from Ruchit. Manav, what about you, individual stock bets?
Yes, even I have 2 buy calls. My first call will be a buy on ICICI Prudential. We've seen the insurance sector been in a very good momentum, and in spite of such choppy markets, it has continued to witness a good trending move. Today, ICICI Pru has seen a breakout on the daily charts, and looking at the overall scenario, it is very well poised to exceed its recent swing high. The momentum indicators continue to remain positive. The prices have a strong support on the intraday basis around the levels of 460 on the lower side. Recommend a buy into this with a stop loss of 455 for an upside target of 500. My second call will be on TVS Motors. In fact, we have seen this stock declined by over 45% from its all-time highs, and it's near to its important monthly support levels. The prices have formed a morning star pattern on the monthly charts, and on the daily perspective there has been a rally which has formed a series of higher bottoms. There was a breakout that was accompanied with above average volumes yesterday. I sense in the near term there is a short term bottom is in place. A lot of negatives have already been priced in, and the prices are bouncing from its deep oversold zone. So I recommend a buy into TVS Motors. It has a very strong risk reward. Even at the current zone, a stop loss of 400 on the lower side. Expect an upside target of close to 445.
Okay, so those are some buy calls. TVS Motors. Well, it's a good coincidence. In January, about 9 or 10 months ago, when TVS Motors came out with a rather good quarter, Dipan Mehta was our guest then, saying that he was very impressed with those numbers then. The stock, of course, in line with the other auto stocks, haven't done well, but two-wheelers are in focus today, so it's good to get in Dipan. He joins us right now on the show with his thoughts. Dipan, good having you as always. Thanks much for taking the time out. So I don't want to start with two-wheelers, Dipan. I can't help but start with talking about what's happening to the biggest buzzing space today, and that's insurance. Now, just wondering, Dipan, fundamentally, how do you look at this? Expensive pocket. Life insurance was expensive, is doing well, but suddenly now general insurance has given this uptick of 18-20%. I mean, I can't fathom a reason. I can't see a fundamental change or a policy change that would have happened here. Maybe there's some basket buying, etc. happening. But what's your own sense of how comfortable you would be in putting money into the insurance sector, whether it's life insurance or general insurance, and why?
First of all, I think insurance is now gradually getting mainstream as far as investors are concerned. The insurance companies, general and life, are scaling up in terms of market capitalization, and in the near future they may find themselves in the indices as well over the next maybe 2-3 years or so. And I think investors looking for secular growth stories are kind of zeroing on insurance companies, where at least the growth rates are higher than some of its peer group in the, say, the banking sector or some of the other consumption or savings oriented businesses. And we have this entire theme of financialization of savings also, and insurance is bang in the middle of that particular trend, which is quite powerful and could lead to a lot of value creation. So I think insurance is coming onto the list of many investors. They are watching it, they are investing in, they are understanding it, because do keep in mind that the sector is a bit difficult to understand. I mean, life insurance is really complex in terms of how the accounting takes place and how the valuation should be derived for the existing companies, and how to kind of figure out what the future prospects and the forecast as far as earnings are concerned. So it is a bit of a complicated subject, and it'll take some while for the average investor to understand them. Right now, on the face of it, the life insurance companies appear to be quite expensive, which is why you would like to just keep them on a watch. If you're holding shares of life insurance, I think it's best to remain invested, but fresh investments, I would just wait a while for a correction or valuations themselves to correct. But we are positive on general insurance space, and what we are seeing in banks and life insurance companies is playing out in the general insurance field as well, where private sector general insurance companies will steadily gain market share at the expense of public sector general insurance companies on account of the sharper pricing, better service and better advertising. As they go along building their network, I think they will gain market share, and that's very positive for the companies over there. But investing in general insurance, also like life insurance, has to be a long-term play, because there will be always quarterly volatility in their earnings because of premium, because of casualty, because of the claims which they may have to pay out, and also because of fluctuations in investment income. So on the whole, to sum up, we are positive on both general and life, but in general insurance we are looking at more actively in terms of investing. Life insurance companies, HDFC, SBI and the others, Max Life, will remain invested at this point of time.
Okay. A small article on BloombergQuint.com as well, if you log on and try and read about it, the factors which could be driving the rally, at least as far as the life insurance companies goes. I mean, this is only a piece on life insurance, but do log on and try and read more about those names. I'm forced, because this pocket is so active, Manav, to just come back very quickly and then we'll revert back to the fundamentals. But Manav, on the charts, any of these insurance names look good for a trade, life or general? There are 4 or 5 names out there.
Yeah, so I've already given a buy on ICICI Pru, but when I'm looking the basket as a whole, SBI Life is also another stock which has seen a very strong momentum breakout today, and in fact, after a good 15-20 days of consolidation, it has observed a good breakout with good amount of volumes, and this sector as a whole, Neeraj, has seen a very good outperformance in last 3.5-4 months especially, and has been in a very good trending rally. So if I have to pick two, definitely I'll go with ICICI Pru and SBI Life. The momentum legs are looking very strong, which has also accompanied by volume. So I recommend that ICICI Pru and SBI Life should be bought on the dips, and eventually I expect this momentum rally to give another upside of 10 to 15% at least for a trading play for next 1.5 months.
Okay, that's the word coming in on the insurance pack. Just want to address few stock. Bandhan Bank, remember there was buying seen ahead of that Motilal Oswal note which came about stating that the stock will be included in MSCI index. And remember today is October 16th, so it gets merged with Growth Finance as well. And we're seeing some bit of profit booking maybe which is coming for Bandhan Bank, which is down 7%. I also want to pull up Asian Paints. That's seen some correction from the top, at least in today's trading session. Asian Paints right now is at day's low, down over 2% in trade. Ruchit, come in here, 1760. I think the earnings come out sometime next week for Asian Paints. Would you trade at current levels?
Although the broader trend has been positive for the stock, because if you see since the month of July itself, in spite of what is happening in the broader markets, the prices have rallied from around 1300 to 1800 now. But on the daily charts, we can spot some divergence, and since the RSI has formed a lower top compared to the price. So one corrective move should be expected before the stock resumes its any kind of uptrend again. So since the trend is positive, I would wait for this correction and use a buy on dips approach. If I get a decline around 1660, 1670, those would ideally be good levels to take a fresh trade in the index, in the stock, keeping stock below 1620, and then again expect targets around 1800. But I would I won't advise taking a fresh longs at current levels, but rather rather advise to use a buy on dips approach.
Okay, buy on dips approach on Asian Paints. Pull up Berger as well. I remember last week throughout, the stock was trading at its all-time high levels, and also there were a lot of long positions which were coming on the future side. Some cool-off seen from those higher levels. Dipan, we've not got the earnings from this space, and of course, overall, if you look at this consumer space, HUL, which is used as a barometer to gauge consumer sentiment, and clearly the volume growth number, and besides that, I guess the commentary which came from management with regard to the rural growth said it all about the economic slowdown that we've been seeing, but particularly the paint space which outperformed in the first quarter. Management commentary has been they do expect double-digit volume growth from here, but pockets which have given you good returns are also trading at very high valuations. What do you do with this one?
Well, you can't buy at these levels, nor can you sell at these levels. So I think from an investor perspective, if you're already holding the shares, then it's great for you. You're sitting on a lot of profit, and the next few quarters also you could see these stocks rally. But from a long-term investment perspective, the risk reward doesn't favor you, and the valuations the way they're discounting the earnings many years into the future. And maybe you would have 1 or 2 more good quarters from paint companies, but then the base effect also will catch up with them, and all the gains as far as low raw material prices also will eventually get priced in and be seen in their operating profit margins. So once all the benefits and the gains have been priced in, you cannot expect these stocks to outperform materially. So I would say that just hold on as far as investors are concerned, but avoid making fresh investments. I think in markets like these, where we are seeing gradually the kind of rhythm coming back into the counters, and seeing many new companies, hitherto companies which had a lot of challenges, they are now coming back into play. I think better to focus over there, and the biggest kind of idea one can take forward over the next maybe a year or so would be to identify companies where there is scope for the PEs to get re-rated upwards, because those are the companies which will give the highest returns. I don't have the names right now immediately, All I can say is that if the last 2-3 years was a great time to buy the tier 1 companies in every sector, the next 1 or 2 years could be a great area to buy the tier 2, tier 3 companies which have got beaten down and are trading at a discount to the tier 1 company within the sector. Those I think may outperform. They may not be the best companies, but they may turn out to be the best investment.
So catch-up play for some of the names. Dipan, so that pocket which doesn't quite fit that description entirely, because nobody in autos is trading at fresh highs in a manner of speaking, but we've seen that first baby steps of some revival. Now the argument is that it's happened because of discounts and that may not last forever. Bajaj Auto today has launched a scooter. They've kind of deviated from their chosen path as well of not entering that space. How do you view investing here? Can there be some P multiple and earnings upticks in the next 18 months? And which pockets within autos then?
See, I think, autos till we are keeping on getting negative monthly numbers, I don't want to touch the entire auto sector. I think we are getting very good data from the industry. Now we are getting even data as far as new registrations are concerned. So when you have such quality input coming in, take advantage. I think just wait and watch, see for the tide to turn. Let's get into a situation where we are high single to double digit type of volume growth rate for all or any of the companies within the sector. See how the discounting is taking place in the market, and then take a call on the stock price and whether it's worth investing or not. But by and large, I think many segments within the auto industry, especially the commercial vehicle and the passenger car, are seeing certain structural challenges. In the passenger car, it is more to do with shared mobility and the likes of Uber and Ola. And in the case of commercial vehicles, it is higher utilization of existing stock because of GST. And these two are very powerful counter trends as far as the companies operating in the industry are concerned. So we like to view those two with a little bit of caution. But two-wheelers, I think, is an interesting space. It's highly consumption oriented. It is susceptible to lower interest rates, and certainly I think discounting and lower cost of ownership should help two-wheeler industry. So that's something which we are looking at. Unfortunately, the two-wheeler industry is just highly competitive, and that kind of makes investing in these companies a little bit more challenging. Nonetheless, as I said, I think let's just wait and watch for the monthly data to improve, and then look at making an investment if at all.
Okay, that's the auto pack. Let's see if there is any sort of a revival one can see, at least in the second half of this financial year. But for the time being, on month-on-month basis, remember, it was only the two-wheeler space which did show some bit of growth at least. Indiabulls housing, on that note, is sitting at the lowest point of the day. The stock's down about 7% in trade. 175.76. Eminent Financial, we did mention when we started the show that stock's also trading a week, and the other one which has fallen, and that's Z, by the way, which has been trading with gains of 4 to 5% throughout the day, has seen some bit of selling pressure from the top. Remember, they also come out with their earnings tomorrow, and today there was a report in Mint paper suggesting VTB Capital, where they've indirectly pledged 10% of share. They informed the stock exchanges that they do have the right to sell those pledged share, and reports as per Mint suggested that VTB is already in talks with two players in order to sell that 10%. Mind you, if that happens, the promoter entity may lose their majority stake, which they currently have, the highest in terms of shareholding. Dipan, numbers come out. I remember last quarter, of course, these concerns around stake sale and how the stocks corrected after they struck a deal with Invesco. There was some bit of disappointment because the street was looking out for not for a financial investor, but for a strategic one, which did not happen. Fundamentally, however, the view has been there's nothing wrong with the business. It's just the leverage that they have at promoter entity, which has dragged the stock lower. What do you do if somebody is still holding to the shares of Z?
I think if you're still holding, it's better to remain invested. As you said, fundamentally, we also have no major issues with Z Entertainment per se. The major risk factor in Z is an inorderly unwinding of the pledged shares. And if the existing borrowers are forced to liquidate the pledged shares which they have, then the stock price could go even lower, as we have seen in the case of Yes Bank. When the Rana Kapoor shares were sold in the market, to cover the loans taken by the group companies, the promoter companies. So whenever there is a selling coming in from the borrower for the pledge stake, that selling is usually quite disruptive and can lead to a lot of loss in value, at least in the short period. And maybe at that time investors can take advantage, but right now you buy the stock at around the present levels, and if the promoters aren't able to get an orderly exit as far as their pledged holdings are concerned, then in a matter of just 48 to 72 hours, the borrowers will sell the shares, and that could easily lead to a 30-40% correction in the stock price as well. And that's the real danger in a stock like Z, which is why it is trading at these levels. So I've put the whole kind of picture in front of you, and depending upon the risk appetite, one could look at Z in that light, that fundamentally it is sound, but you could have a potentially large supply waiting to be sold in a short period of time in case no deal is being, the promoters are not able to get any deal for their pledge shares.
While a lot of beaten down pockets, as Dipan said, are also moving up today, and we'll get some chart checks going on some of these. Dipan, before we thank you, one question that I have for you is on BPCL. Now, you've looked at deals in the past in the oil and gas space as well, which have had global investors coming in. Putting all of that into perspective and the government's willingness to divest a majority stake or a large strategic stake out here, would you believe that if a deal is in the offing, let's work with an assumption that the deal is in the offing, then there are gains for a minority investor as well?
Absolutely, I think, because an open offer certainly at a higher price would provide an exit opportunity to the minority investor. But I think that if the government actually bites the bullet and gets a privatization going, then it will be a fantastic re-rating for the entire PSU basket, including the banks, the NBFCs, engineering companies, oil marketing companies. Across the board, I think investors will start pricing in that possible upside. And then depending upon what the experience of the privatization has been and what the political fallout is, it could certainly open a new, very large avenue to raise resources for the government. But I think these are all more into the future. Let's just see how this actually plays out. There have been many instances in the past the government has tried to privatize, but at the end of the day, they've just then ended up selling it to one of the other PSU companies, as we have seen in the case of HPCL, and that doesn't really benefit anyone at all. So let's just wait and watch. I think investors are pricing in a privatization deal as far as BPCL is concerned, and all I can say is that hope they are not disappointed with the steps that the government takes.
So too. Dipan, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you for having me.
That's the view from Dipan Mehta of Elixir, but BPCL, a stock firmly out there. I reckon it would have seen some long positions getting built, because it started off about 2-3% higher and is now trading in at about 5%. There you can see for a brief moment it was up about 2-2.5%, and then been steady about this 5% up move mark. Manav, Chopra, you want to comment on a BPCL? I don't know if you've spoken about it already or no, but for anybody who doesn't have a position as yet, would it be advisable to take one?
See, I wouldn't recommend initiating any fresh trades in BPCL at the current level. I don't see any good risk reward, and there are some stiff resistance for this stock around the levels of 530, 535. So there's not much of an upside. I sense in the near term, as long as the prices would trade below 530, 35 levels, it could be in a broader sideways move of having support at 500 to 530 trading band. So any fresh long position should ideally be created only if it closes above 535 levels on the closing basis, and that would open the gates at least for the next high levels of 575. So at least in the near term, I think traders should be watchful, and any long positions only above 535 levels.
Okay, that's the technical view on BPCL, the stock which is rallied, I guess, nearly 40% so far in this calendar year. Hopes if government privatizes, sells its stake to an MNC player, that could lead to a re-rating, of the entire space. And the stock currently sitting with gains of 5%. The other one which has gone up is Ashok Leyland. That stock's seen gains of about 2.5 to 3% as we speak, 71.5. Ruchit, at the high point of the day, would you trade Ashok Leyland at current levels?
last few trading sessions, we have seen a consolidation phase in Ashok Leyland, and the higher end of that consolidation placed around 72.60, 72.70. So it's very near to that breakout level. So rather than preempting a breakout now, I would wait for a breakout. If the stock moves above 72.70, then the stock could approach the 200 DMA, which is placed around 80 rupees. So buy above 72.70 for target around 80 rupees.
Okay, and then the other, of course, autos now the focus could well be on Bajaj Auto as well, simply because what's happened very interestingly is that the Chetak is back.
Yes.
I mean, who thought of this?
Bajaj.
Hamara Bajaj. And yeah, I remember this name for such a long time, and a lot of old timers would remember this as well. The Chetak is indeed back. Bajaj Auto today showcased its electric scooter, resurrecting the old brand. It's a big shift for the company, which had stopped selling scooters a decade back. This was a long time ago. But Bajaj says its mainstay is going to remain motorcycles. The aim is to start selling from January next year. Nishant Sharma caught up with the executive director of Bajaj Auto, Rakesh Sharma, and started by asking him why Bajaj chose to turn to a scooter for its first electric offering.
Of course, we would be looking for that. As you know, Chetak is an iconic brand name woven into the Indian fabric. And of course, it's a bigger thing within the company. So we are very happy that we have this opportunity to revive the Chetak, and I think it will really add a lot of power to the whole electric initiative by layering it with the all the respect and the equity of the Chetak brand.
Right, and also talk to me about what kind of customers are you eyeing for this vehicle, and then we'll come to the pricing.
So obviously we are looking at the premium end of the customers, because even when we were designing the vehicle, we set out on this initiative, it was very clear that the electric option is way more expensive, at least for now, for the next few years. It will remain a very expensive option compared to the IC engine. So we have to look at the premium end of the customers. We have to look at people who go beyond price and value, who are whose emotions we can invoke through styling, who are attracted to technology, who are attracted to the convenience, who are also attracted to the whole concept of electric. And we are attacking those kind of customers.
And how can we expect the pricing to be around in the range of?
So the pricing we will talk about in January, which is when we expect to make the commercial launch in Pune to begin with. Because we have to roll it with financing options, etc., we are putting all that together, and we should be announcing it in early Jan.
And also talk to you about the performance of this vehicle on a single charge, how much it can travel.
So there are two modes in it, the eco mode and the sports mode. In the eco mode, it can go almost up to 100 kilometer range. It delivers a 100 kilometer range. In the sports mode, about 80 kilometers range in a single charge.
And everyone expected you to come up with a motorcycle brand in form of electric. Was that a strategic decision to bring back the iconic brand, and also to bring back scooter in the electric vehicle? That's going to be a first vehicle in the electric foray, right?
Yeah, so this was a strategic decision, as you rightly said, because there is no conflict in this. We walked out of scooters and we have been focusing on motorcycles, and the motorcycles will remain, it's our mainstream, it will remain our focus. With scooter format, we know that it's going to be niche. Electric is going to be niche for some time. And with scooter format, the advantage for us was that there was no conflict. We sidestepped the conflict. Every Chetak which we sell is going to just add to our volume portfolio. It will not. There may be some transition from motorcycle, but that cannibalization will be very minor. So it was an obvious strategic choice to expand into the scooter niche rather than a motorcycle niche. Having said that, we are working on electric motorcycles. We are working very closely on high-end electric motorcycles with our strategic ally KTM. So that work in motorcycles is also on.
All right, that's the management of Bajaj Auto. Well, they will be rolling out in the month of January, and they will start with Pune city. And let's see, no clear with wording coming with regard to what the pricing would be. But remember, EV vehicles, or rather two-wheelers, also are on the expensive side, is what he highlighted. But moving ahead and talking about the markets, while the Bank Nifty is still sitting with some bit of cuts, let's find out which are the Fab4 stocks today which have made it to Yash Upadhyay's list today. Let's go across to him. Hi Yash, good afternoon.
Afternoon, Navneet. I'll start first with DB Corp, and it's the earnings season. The company has come out with a good set of numbers and was an operationally strong quarter. They reported a 64% jump in their bottom line, whereas their margins too have expanded about 260 basis points on a year-on-year basis, coming in at about 18.5% versus a little over 16% in the same quarter last year. And this was down to the lower raw material prices for the company, as well as cost control measures that the company has undertaken in the quarter gone by. So that is the reason why we are seeing about a 3% uptick. BPCL is up about 5% today, and this is on the back of the several media reports that came out earlier in the day with respect to reports suggesting that state-owned Saudi Aramco is in the fray to acquire the government's stake in the company as the government looks to privatize the oil giant. So that's the reason why we've seen this big move. At one point in time, the stock had gained in excess of 6.5% as well, and is buzzing in trade. Bajaj Consumer Care, exactly 24 hours back, we had the news that the promoters have sold about 20% stake, 22% stake in the company. We had the bull deal data come in yesterday, which has shown some strong buying coming in from the large mutual funds as well as the institutional investors. The proceeds from the share sale will be used by the promoters of the company in order to reduce the debt on its books, as well as bring down the promoter pledge in its overall shareholding, which was a key overhang for the stock and the reason why it has nearly halved in value. So that's the reason why we're seeing a 20% uptick. And lastly, the insurance names, they continue to remain in focus. The life insurance companies, they've been doing well, but now it's the general insurance companies that too have participated. Both GIC as well as New India Assurance, they are up 20% in today's day of trade, buzzing on the back of that. GIC posting its highest ever one-day gain, locked in a 20% upper circuit. So watch out for these names.
Okay, thanks a lot for that. I wonder what ICICI Lombard is. That stock is down about 4.5%, by the way. Keep that at the back of your mind. So the rally is selective. Yash, thanks so much for putting that into perspective. Not every stock is doing well. Well, speaking about insurance companies throughout the session today, Ruchit, just wondering, ICICI Lombard General Insurance Company?
The stock has formed a high top, high bottom structure, but in last 1.5 months, we have seen a broad range getting traded. 1150 to 1280 is the range in which last almost 2 months has happened. The stock is in this range. So in case the stock gives a breakout about 1280, then only I think it would be prudent to say that the prices would resume its high degree of trend. So they would wait for a breakout about 1280 to take any fresh long position in the stock. But yes, since there are no signs of reversal of the broader trend, and this is just a consolidation or a time-wise correction within an uptrend, if any existing long positions are there bought at lower levels, then they could be held on with stop loss below 1150.
Okay, ICICI Lombard is down almost 4.5%, while the other stocks in the same space are seeing good amount of gains today. On that note, let's bring in Yogesh Mehta of Yield Maximizers, who joins us on the show. Hi Yogesh, good afternoon, and thanks a lot for joining us today. Let me start off with the IT pack, since all the big numbers are out from that space. Infy, TCS, Wipro, all three of them have come out, and Mindtree will be coming out with its September quarter numbers today. One thing is there's been slowdown seen in BFSI vertical, which is the main vertical for most of these IT companies. What did you make of the numbers? The lower end of margin guidance increased by Infy. In fact, in the June quarter also the increased guidance, but disappointment coming in from TCS. Going into numbers, there was some selling seen in TCS and buying in Infosys, and that's sort of reversed because now profit booking has come in for Infosys. But tell me one thing, going ahead now for the next 6 months, 1 month, if one were to take a bet on these large cap IT companies, which one would you pick at a time when even the valuation gap is bridged?
Hi, good afternoon. The IT numbers are out almost all the large cap companies, and today we remind you on the mid cap side. But what I feel is that looking at the numbers in Infosys and TCS, the deal means TCV value is much on a higher side, though the BFSI vertical is not working fine due to the global scenario. But I think it would be a temporary one, and retail segment and apart from BFSI, other verticals are doing very well, and there is no degrowth into that particularly. So I think on the valuation front, they are not much of an expensive valuation, and the growth rate for the second half would be around between 2 to 3.5% constant currency growth. It is I think it is very much reasonable. We cannot expect much high growth rate for these IT companies. And looking at 6 months, 12 months down the line, or maybe 6 months short-term view, I think capital protection and the investment portfolio would be a capital protection kind of a tool here in the IT names. We cannot expect more fireworks into that. Maybe TCS around 1950 to 2000 levels, but downside is very limited. It cannot go below. The downside is not more than 5%, and tomorrow it is getting ex dividend as well for 45 rupees dividend per share. But upside is also very much limited, 2150 to 2160. So all in all, I would say it is very conservative stocks, and these are the names which should be there in the portfolio. So I don't think there is much of a dent into the these stocks, particularly IT names, and one should hold on with that as an investment.
Two or three new kids on the block, and while IRCTC may be the toast of town, Yogesh, three names, and I wonder if you track any of them fundamentally. Polycab India, which is at fresh life highs. IIFL Wealth, not in the same vein because it's a very recent listing and a demerger of sorts, but it's trading well. Last one is AFL India.
The first one, Polycab, I also like the stock and the way it has been right now valued. And in the basket where everything is expensive, this one is available with reasonable. I think I would not say reasonable. It's an attractive valuation. It is trading at around less than 13 times or maybe 13.5 times P multiple. The growth rate of 18 to 19, it is almost 38 to 40%, and I believe FY19 to FY20, for FY19 to 21, this growth rate would be around 20% CAGR. The EPS would be around 50 rupees next year. And cable and wire business and LED business all are doing great. Even we have seen KEI Industries into the same sector. Even Phenolics cable we have seen. So all those are doing very well. Even Havells can be comparable. So looking at that, I think in the peer sector it is available with low P multiple, and as well as the growth is also visible. So I would definitely bet on this. Stock has moved up in last two sessions, today and yesterday, but I think around 701k entry into the stock. I am particularly looking at this stock at least with 50 rupees EPS, even if it is at valued at 18 times, there is a decent upside of more than 20-22% over next year. So that is one. I'm considering this as a stock pick for at least next 1.5 year. The IRCTC, one of its own kind of a monopolistic business, and the growth is clearly visible, and that's why we have seen fancy into IRCTC on the listing day, and even there is no sign of a correction in today's session as well. But somehow it is been hype. I would wait for a correction, but it may happen that DMart, everybody was waiting for a correction after listing day. It never came. So one should get into IRCTC, though valuation wise the growth, I expect that it will be at around 30-33% over next 2 years, with the ticketing convenient fee will be implemented, and then drive this profitability on a higher side. So that will give some more comfort on the valuation. So one can get into the stock around 700 level, at least if not 50%, 33%, one should start investing. And I firmly believe that it will be a good portfolio stock. FL is a little expensive, but I have no much idea on that. Last time also we discussed, but I'm yet to read about that. But the business they are into is directly correlated with the digital marketing and all. So I think in this technology world, that could be one fancy name. But first two names are definitely a portfolio stocks.
Okay, some other gainers, and just before we get to what daily rooms are recommending in the session today, lo behold, Bajaj Finance is back to winning ways, back above 4,000, 4,021. Every time there is 2 or 3 days of a weakness that gets bought into, and in today's session is no different. 3.67% higher, 4,020 and counting. Ruchit, do you want to take a quick chart check before you get to what dealing rooms are recommending? Bajaj Finance?
The thing is, you rightly pointed out that whenever there are even minor declines in the stock, those declines have been bought into. And last 2 weeks, we can see a sideways consolidation, which has led to formation of a bullish flag pattern on the daily chart. Now, this is a bullish pattern, and hence, I think even at current levels, if one is looking from a short-term perspective, one can look to enter the stock with stop loss below 38.30. And in next 1 or 2 trading sessions, once we get a breakout above 4100, one can expect targets around 4300 to 4350 in very short time frame.
Okay, that's the view on Bajaj Finance, which is trading around the levels of 40.29 or 30 thereabouts. I think the numbers come out next week for this one, so watch out for that. Well, it's just 15 minutes to go for markets to shut shop. So let's go across to Darshan as well as Yatin to find out what their channel checks are suggesting in the dealing room. Good afternoon to both of you. Darshan, you go first.
Yeah, so one of the stocks that's been spoken about is BPCL, and it's been moving up significantly over the past few days in terms of all the news flow that's doing in terms of the privatization and who could buy it. But some of the domestic funds have been actively accumulating BPCL over the past few days. They believe that the deal that will be done at a premium. So BPCL is the first stock. Indiabulls Housing Finance is down another 8%. So funds, despite all the clarification that comes in from the company, some of the funds are exiting this counter on every rise. And finally, Hero MotoCorp is down 2.5% in today's trade, but some of the PMS buyers are accumulating this counter at lower levels. But Yatin, what are you hearing?
Darshan, a couple of stocks to start with. Axis Bank is one stock which has risen almost 1.5–2% from the day's low. There is a fair amount of accumulation which we have seen intraday at lower levels. Remember, they report their quarterly earnings on Monday. Of course, it's a market holiday because of the Maharashtra elections, but Axis Bank is something wherein dealers are indicating buying at lower levels. Adani Enterprises also is one stock wherein dealers are recommending a buy today, sell tomorrow kind of a strategy. This is one stock based on F&O trends. Dealers expect the momentum to continue. And finally, we have Hindalco from the Aditya Birla Pack non-ferrous space. In general, today we have seen a lot of selling coming in at higher levels for the metal stocks. So both steel as well as the non-ferrous pack, the aluminum pack is under pressure, and dealers do indicate that there could be some further weakness in these metal names.
Okay, Darshan as well as Yatin, thanks a lot for bringing that dealing room check. Let's just address the cement space as well. Remember, ACC came out with the numbers post-market hours yesterday, and I think you will have Ambuja posting its numbers on Friday. Ambuja has seen gains. I think it's sitting at almost at the high point of the day with gains of 3%. Ultratech too has gained about 2% in trade. Yogesh, overall, the demand slowdown is something which is known in the cement space. Prices have been correcting since the month of May. Of course, sequentially, if one were to look at the realizations and EBITDA per ton because of price correction, it's come off on year-on-year basis. The numbers are looking good. And of course, ACC's numbers have been better, at least what the street was expecting. What do you do with this pack? Because we've not seen any sort of revival in the demand environment when it comes to the cement pack.
So far we are not the demand recovery and the improvement into the dispatch and the growth is not visible. But the way government has planned out their infrastructure contract they have to award, and that may drive these dispatches and the growth for cement companies over next 12 to 15 months gradually. It's not overnight job. So I think the way they have been, the Ultratech has been set with the largest capacity utilization as well as the capacity pan-India presence across. That will give some kind of an edge for Ultratech. And of course, they are valued at a little bit of on a fair side. It is not expensive much, but that would be the one portfolio stock one can look at in Ultratech at 4,200. And ACC, which have come out with a result, fantastic set of number, and of course, it is almost in the peer set, it is a discounted one on the EV to EBITDA basis and EBITDA per ton basis. But I think cost optimization and the corporate tax rate cut, this has driven profitability for this. But of course, it seems that downside seems to be limited for these companies, and growth will be visible over next 9 to 12 months.
Yogesh, but ACC is also a pan-India player. Of course, it has more focus in South and East market. And you mentioned about multiples EV by EBITDA. I was just reading one of the articles which said that ACC has been trading at historical, the value on EV per EBITDA, the valuations are now sub 10 and compare it to Ultratech, which is trading somewhere about 12, 13. So does that give you valuation comfort? Even the replacement cost it's trading very close to its replacement cost as well.
There is a difference between these two companies on the plant layout side. The machineries and the replacement cost we are looking at ACC are quite old, and they are not much more on optimization. Wherein Ultratech has done brownfield expansion by getting into JP's assets into cement manufacturing units. So all those are a little bit of advanced side, and that's why Ultratech will always trade at or the quote at on the premium side rather than ACC. So that would be difference would be there. ACC EBITDA per ton would be valued between $100-$105 per ton, and while it will be Ultratech will be 125 to 130.
Okay, that's the cement pack, but just 10 minutes to go for markets to shut shop. So let's get you some closing strategies from our technical experts. Manav, coming to you. Any BTST or any STBT for tomorrow's session?
Yes, I have two buy calls. I think my first buy call is on HDFC Limited. We have seen this stock trying to form a base around the levels of 2000 to 2020 since last couple of weeks. And since last a few days, I think this has been one of the stocks, the heavyweights, which have not seen that kind of a momentum. But today, a strong breakout today, and the prices are trading above its important levels of 2020. And the breakout has also accompanied by volumes. I sense in the near term this could see a good momentum rally, a buy with a stop loss of 2020 for an upside target of 2100. And my second pick would be a buy on UBL. We've seen this stock forming a good support around the levels of 1250 on the lower side, and has seen a good move from its recent lows, confirming a short-term bottom in place. A buy with a stop loss of 1250 on the lower side for an upside target of 1365.
Okay, Ruchit, your closing strategy would be?
I would recommend going long on Avenue Supermarts. In last 3 weeks, the prices have seen some consolidation phase, and in this consolidation just seemed to be a time-wise correction within an uptrend. Now, the 20 days exponential moving average has acted as a support, and now prices seem to be gearing for the resumption of its uptrend. So one can go long on Avenue Supermarts with stop below 1830 and expecting target around 1935 to 1950.
Oh. And the big keep on getting bigger. 1878 for an Avenue Supermart. Some remarkable moves out there for that stock. It just continues to do well. What is also doing well today is Delta Corp. The numbers were okay, nothing to set the stage on fire, but it's doing well for now. 4.4% higher. Niche business which somehow has lost favor. Yogesh, quick thoughts here. Delta Corp?
Yeah, on the online gaming business, Big Adda and other stuffs are doing well for this company. And the hangover over offshore casino on the Goa side is right now is on the sideways. So that has cleared some air, and that's why we may see some excitement into the stock prices. But otherwise, it remains languish between 150 to 200 level. There is no much of it cannot move outside of this range of valuation comfort. So unless there is a big new casino introduction or the opening of a casino, unless we may not see further jump into the profitability, it will remain on the stagnant side. So I feel that it could be a trading stock, not the portfolio stock.
What about ITDC? I just want to pull up this week's chart of that stock. 15% higher in today's session, and the last 7 days or this week, whatever you pull, you will just see the kind of mammoth gains that the stock has made. 41% in 3 days alone. It's just gone one way, and that is up. Fundamentally, Yogesh, maybe you don't know the exact numbers, etc., but any clue as to what's happening here?
See, fundamentally, I have never checked this company, but probably the strategic sale, PSU sale, and that could have some kind of a connection with this company, and probably that would have driven some kind of excitement. But otherwise, not much clue on this, Neeraj.
On the charts, and ITDC, has it done too much too soon? Manav, the question is for you.
Okay, all right. So we have already seen a very good rally, Neeraj, for this stock, but most importantly, the stock is coming and seeing a good move after a series of preceded down move, and the recent leg that we witnessed in last 15 to 20 trading days after a consolidation breakout has seen a huge amount of record volumes. We haven't seen this in past many months. It definitely indicates that structurally things have changed. Price is definitely giving you things much in hand, and we did see some sort of an accumulation pattern. So I sense we will see this rally to see some more up legs. I won't be surprised to see if the stock still sees a move and would rally towards the levels of 400, because this momentum looks very fresh. Most of the oscillators are bouncing from its deep oversold levels, and the volumes are definitely indicating there could be some strong hands which have got into. I sense on the immediate basis 320 to 310 are the support for the stock, and anybody who is holding on to the positions should maintain a trail stop loss in this scenario. 310 show your trail stop loss, can expect upside rally even towards the levels of 380 to 400.
Okay, in fact, Manav mentioned about the volumes. They have been on the higher side. Today's volume, if you compare them to average volume of last 20 days, that's the white line which is projecting today's volume. And looking at the financials as well, in the last quarter, they posted a loss of 70 lakhs, and the revenues also, the sales were down 15%, which stood at 62 crore. We'll wait by for the Q2 numbers, but there is definitely some buying seen in this counter for the last 4 to 5 session. Yogesh, before we let you go, any final thoughts from you so far? Whatever earnings have come, is there anything where you're recommending to deploy money?
Hardly any company have come out with fantastic set of number. So based on that number, still I'm evaluating. But so far the numbers which have come, there is nothing looks like to be more exciting. Like Hindustan Unilever already quoting at very high valuation, so not comfortable there. And even on the TCS, Infosys may remain sidelines. But on the expectation front, I think now on the sectoral front, we have seen NBFCs to private sector bank, PSUs to private sector bank shift. And probably this time it seems after 3, 4, 5 months, after 4, 5 months, I'm looking at some of the auto companies where numbers will not be good, but I think festive season, October month sales will give some positive surprise. And probably this time it's a good time to enter into auto stocks after a long haul.
Okay, Yogesh, we let you go on that note. Thanks a lot for joining us today and taking us through your views on the markets. And talking about the markets, prime focus is the other stock from the broader markets, which has rallied about 18% as we speak. Inox Wind went up after the exchange announcement that they're looking to sell 50 megawatt of power project to Adani Green, and precisely that's the reason why the stock saw such a big jump. That's the wind power project sale to Adani Green. And talking about Adani Group, I just want to quickly take a technical check on Adani Enterprises, which has rallied 17% this week. Ruchit, very quickly on the charts, if somebody is holding on to longs, what would you suggest?
I would suggest keeping a trailing stop loss method and continue holding the long positions. 154, 153 would now act as a support. So 150 could be kept as a stop loss. And on the high side, one can expect targets around 170, 172.
Okay, Jain, stay on. We'll just take in closing thoughts from you. But as we said at the start of the show today, that while the markets were not in the pink of health, you'd probably see some bit of an uptick in the last 1.5 hours of trade. That's the pattern that we've seen the last 3 days. Today is no different. Bobbing between the red and the green is the Nifty Bank, but not down about 0.5%. The Nifty and the Sensex too ending in the green, which is a good sign. And the broader markets, maybe a mixed bag. Small caps in the green, though that's a good sign. And the mid caps off the lows of the last 1.5 hours. So all in all, it's not a close that too many people will complain about. But let me talk about the large caps first and what's happening or what's moving within the Nifty on the upside and the downside. Navneet will then bring you up to speed with what's happening at the broader end of the spectrum. BPCL up about 4%. Bajaj Finance, a strong 4% up move for that one. There's strength in Z today, 3.5. Results tomorrow for that one. ONGC, HDFC are amongst the other heavyweights that have done well. And HCL Technologies ahead of numbers on the 23rd is also doing well. Wipro, of course, 2% after the numbers. What's not doing well? Hero MotoCorp. Then the commodity names, Hindalco and Vedanta. Some weakness in NTPC and Power Grid and GAIL as well amongst the PSU names. And well, while the mid-cap Adani stocks may be flying around, the more stable and the large one is balancing it out down about 1% in the session today. But if the large caps have gained some bit, the mid caps, while the indices may have done what they have done, the quantum of gains and losses in some of the stocks is quite astounding today, Navneet.
That's right, Neeraj. In fact, let me start off with the gainers. There were a lot of stocks or pockets which moved today. So let me start off with Bajaj Consumer first. Remember, the promoters sold about 22% stake yesterday to cut debt at group level because they had pledged their shareholding, and that stock saw recovery after a lot of fund houses bought in the open market, 20% higher for this one. And insurance as a pack we've been discussing. So you had GIC, RE, National India Assurance. Both of them were locked in upper circuit with gains of 20%. And SBI Life, which came out with the numbers yesterday, were good on all parameters. Morgan Stanley also stated they maintained their buy rating on the stock. The margin expansion from the company continued, and the stock's closing with gains of nearly 5%. From the auto pack, you had Ashok Leyland, which was your top gainer. Even in the Nifty Auto Index, saw some buying, I think, in the second half of the session. As you can see, the stock's closing almost at the high point of the day. You had something like BF Utilities. That's our buying momentum. I think in the second half, there was some buying seen coming at lower levels. Stock is closing with gains of 13%. From the cement pack, Ambuja will be declaring its numbers on Friday. So ahead of that, some buying has already started in the stock, which is closing with gains of 3%. And the ID pack has been up and about from the broader markets. Tata Elixir was up for the fourth straight session today, so watch out for the stock, which is closing with gains of 3%. On the losing side, selling pressure continues for Indiabulls Housing, which was down 7% in trade, your top F&O loser also for the day. And Bandhan Bank and PNB Housing were a couple of other counters in today's session, which witnessed some bit of a selling pressure. And specifically for Bandhan Bank, I guess, Neeraj, it was more of profit booking. It had rallied ahead of the news of being included in MSCI India.
And how?
MSCI Index. Yes.
So it's fine for it to give up some of the gains. I mean, frankly, the smart trader should have anticipated this, to be honest. But the Nifty Bank not closing all that poorly. The market breadth should come up on your screen. It had converged and then stayed that way, and I reckon it wouldn't have changed too much. So yeah, hardly any difference. I mean, you could almost say even Stevens other, even though advances have a minor uptick, but this is even Stevens in terms of the market breadth for sure. But the turnover, the last few days, it's gone up. The F&O turnover just sub of 10 lakh crores the last few days. Let's see if today's session we've eclipsed that. I reckon we would have done that. And the cash market turnover on the NSE too, about 35,000 crores. Yeah, so the cash market turnover is on average, but the F&O turnover is certainly inched up closer to the weekly expiry.
Yep, and let's take a look at the Nifty contributors list as well as to which were the stocks which contributed today. So dominated by heavyweights like HDFC and Reliance, and also something like Bajaj Finance, which is not a heavyweight, by the way, but the stock gained about 4% towards the end. ICICI Bank was the other one which contributed, whereas what capped the moves on the upside were your stocks like ITC, Asian Paints, and also something like Kotak Mahindra Bank and L&T.
This is stunning moves. Let's see how what our experts think about what could happen in the near term. Manav, we usually talk about the markets, but that's okay. I want to talk about two heavyweight financial names and how do you think they will do, because they might well determine the course of the Nifty Bank. Bajaj Finance and HDFC Bank.
Okay, so when looking at the charts for HDFC Bank, Neeraj, this stock has, after a good sharp rally that we witnessed a few weeks back, it has overall been in a sideways consolidation. One positive thing for HDFC Bank, it's observed a strong recovery today from its intraday's lows. What is missing is the momentum rally, and I sense we could only see that coming in HDFC Bank once if it crosses the levels of 1245. At least one positive trigger that I like to add, the HDFC Limited has already given a breakout today. So I sense going forward, if HDFC Limited and both HDFC Bank start moving in a tandem, Bank Nifty could swiftly move another 500 to 1,000 points. Looking at the charts for Bajaj Finance, today it has seen a breakout today on the daily charts, and we have also witnessed a good amount of open interest addition with volumes. I sense going forward, today's choppiness likely, it was on a stock specific levels, but last 1 hour trade definitely indicated that there could be a strong bull action rally in next couple of trading sessions, and if these heavyweights starts contributing on the upside, I won't be surprised to see a good momentum rally coming. So, but if I have to pick one, I will go with HDFC Limited first, followed by Bajaj Finance, and then HDFC Bank.
Ruchit, would you believe that financials could lead the way, or would some of the other sectors come up?
I think if you look at Bank Nifty's index, then last 6 or 7 trading sessions, the index has traded in the broad range of 28,850 on the high side and 27,800 on the low side. So for the banking and the financials to lead, I would like to see a breakout first in the Bank Nifty index about 28,850. And if we see a breakout about 28,850, then only I would tend to pick up stocks from this sector. Otherwise, from overall sectoral point of view, Nifty Auto Index charts are looking good. Even Nifty Metals, although some of the metal names have corrected today, but stocks such as Tata Steel from the Nifty Metal Index are showing much promising signs from short-term perspective. So auto and metals would be the names where I would more focus on. And in the banking space, whenever I see a breakout about 28,850 on the Bank Nifty Index, then I would tend to pick stocks from the sector.
Okay, on that note, Manav as well as Ruchit, appreciate both of you joining us and taking us through your technical views on the markets. With that, it's a wrap on this edition of Countdown. But before you leave, listen to the Federal Bank's MD and CEO Shyam Srinivasan decoding Q2 earnings for us in a chat with Advait Palipu.
For the quarter, our deposits grew almost over 7,000 crores, which is probably one of our best quarters in a long time on deposit growth. As you pointed out, the bottom line was very strong. We had our highest ever net profit at 417 crores. The momentum on credit growth was good in certain pockets. We saw pickup in retail, which grew Y on Y almost 30%. Some parts of the business grew 20%, which is business banking and small business loans. The corporate growth, net growth on corporate was about 10%. So you'll see a 30, 20, 10 kind of credit growth. Blended was 15% credit growth Y on Y. Deposit growth Y on Y is 18%. For the quarter is running at about 20%. Fee income was very strong. We saw strong pickup in almost every line of fee income. The interest income for this quarter was muted because for two reasons. One, we saw a big pickup on deposits. So the cost of carry of the deposits was there. And the second was that we have a large part of our book, 20% of our book, priced to an external benchmark for almost 2 years. So the T-bills rates have fallen quite materially. So that impact did have play through on the interest income part. But that's only a point in time. So I would say the high points of the quarter were strong deposit growth, credit growth is quite intact. The slippages that were higher in this quarter were from pre-identified pool of accounts. So overall, the net profit growth was quite commendable in the current environment that we are. We were helped by the tax rate changes, but equally we made significantly higher provisions for potential stressed accounts. So that's how I'd characterize the quarter.
Sure. You had mentioned that in your press briefing that you had identified 3 to 4 stressed accounts, 2 of which have surfaced. One was an ILFS road asset that you said you've recovered. So what was the recoveries in total across all stressed assets?
No, we had at the beginning of the financial year, from a pool of the entire portfolio, we were concerned that 4 accounts may have challenges in the course of the financial year. One of them was an ILFS road asset, which has actually turned out okay. They have servicing and by all counts, they may be even bought out because there are bids in the marketplace for the road asset. The other 3, 2 of them are housing finance companies and the third is sort of a large group which has interests in many areas, entertainment and entertainment and film finance companies, a bunch of stuff. And I think that account has slipped and we made necessary or even more aggressive provisioning on that. The account is well covered, security of more than 2x. So we believe that in the course of the next few quarters, we should be able to recover that from the security that is held. The home finance companies are in the public domain. They are going through challenges. While they are standard yet, we've made the provisions for them.
आइए इन्वेस्ट कीजिए